Business Bay might be the easiest Dubai investment area to misunderstand in 2026. People hear central location, canal views, corporate demand, and proximity to downtown, then assume almost any unit here is a strong buy. That is not true. Business Bay can absolutely work for investors, but only if you understand the difference between the right tower and the wrong tower, the right layout and the wrong layout, and the difference between headline centrality and real rental performance. If you want a sharper shortlist for Business Bay based on your budget, target yield, and timeline, message Astra Terra Properties on WhatsApp. We help investors compare ready, near handover, and off-plan options without wasting time on weak inventory. Welcome to Astra Terra Properties. In this Business Bay area guide for 2026, I will show you who this area suits best, what keeps demand strong, where the risks are, and how serious buyers should think about strategy before entering. Let's start with why Business Bay keeps showing up on investor shortlists. The area sits in a high-recognition position next to downtown Dubai, with fast access to Sheikh Zayed Road, DFC, and many of the city's main commercial and lifestyle zones. That centrality matters because it supports a broad tenant base. Business professionals, couples, relocation buyers, and short-term demand all understand the location immediately. In Dubai, recognizability helps liquidity. But central location alone is not the whole story. Business Bay is not one clean product. It is a mixed tower environment with meaningful differences in build quality, service standards, traffic experience, finish level, and long-term tenant appeal. Two apartments can sit close to each other on the map and still produce very different investor outcomes. From a pricing perspective, Business Bay often appeals because it can feel like a strategic alternative to paying full downtown pricing. For buyers who want proximity to the center without automatically stepping into the highest price bracket, that psychology matters. But this only helps if the building itself supports the investment case through decent demand, manageable service charges, and a unit layout people actually want to rent. Now, let's talk about rental demand. This is one of Business Bay's strongest advantages. The area benefits from office adjacency, city center convenience, and a tenant pool that values access over suburban space. That can support resilient occupancy in the right buildings. For investors, this matters more than marketing. Real tenant depth is what protects cash flow and improves your exit quality. What about yields? In 2026, Business Bay can still attract investors looking for realistic gross rental yields in the broader 6 to 8% conversation, depending on the exact asset, tower quality, management, entry price, and unit type. But this is where buyers need to stay disciplined. Service charges, finishing standards, and oversupplied micropockets can quickly damage a yield story that looked good on paper. One major mistake buyers make is treating all towers as interchangeable. They are not. In Business Bay, tower selection is everything. Some buildings hold attention because they are better operated, better located internally, or easier to rent. Others may look attractive online but suffer from layout issues, weaker maintenance, or too much competing supply. If you skip this filter, you are not buying the area. You are buying hidden problems. So what strategy makes sense here? If your priority is immediate rental clarity and cleaner underwriting, Ready Property deserves serious attention. You can inspect the real building, understand the tenant profile, and stress test service charge reality. If your goal is a balance between appreciation and shorter execution risk, near handover can be attractive. And if you are buying off-plan, the only rational approach is to stay highly selective on developer quality, location within the zone, and exit competition. Here are the red flags to watch. Weak layouts. High service charges that eat the yield. Towers with too many similar resale units. Buildings that depend more on brochure energy than proven tenant demand. And units that are technically central but practically inconvenient once daily traffic, access, and livability are considered. So the Business Bay verdict for 2026 is this. The area still deserves attention. It offers centrality, recognizability, and deep rental demand. But it is not a lazy buy market. The investors who win here are the ones who filter aggressively for tower quality, layout, service cost reality, and cleaner exits. If you want Astra Terra Properties to build you a smarter business bay shortlist, or compare Business Bay against Downtown, JVC, Dubai Marina, or another Dubai investment area, visit Astra Terra AE or message us on WhatsApp today.